Hey everyone, my name is Tim, and today I'm going to be doing my stock review on a pretty high yield dividend stock. It's ticker symbol ZIM or ZIM Integrated Shipping. They're an Israeli shipping company, and they have between a 25 and 40% dividend yield at any given time, and they do have a tendency to express to their shareholders between 30 and 50% of their profits. So I'm going to be going over their company information as well as some of their financials, their dividend information, and also some of their options and company performance. And there is Harmony coming in to say hi. If you like this video, don't forget to hit the like and subscribe button down below. It does greatly help out my channel and will make Harmony very happy. So ZIM Integrated Shipping Services Limited has an EPS or earnings per share and for a forward ratio of 42, which is kind of middle of the road. It's slightly higher than I normally like, but it's not too bad. They do have a PE ratio or price to earnings of 0.98, which is extremely low and pretty good. They currently have what's on this page is slightly misleading. It says a trailing 12 months dividend yield of 66.02%, but that is actually not accurate as of this time. It has been lowered due to the cost of shipping containers going down since the pandemic's been pretty much taken care of for the most part. It's not quite all the way there yet, but it's getting better. And it does have a pretty high volume at almost 8 million per day. As you can see, over the last year, it has kind of done not the greatest. And it has a high of close to 90, and it has dropped down to 41.05 as of the end of the day on Friday, August 26, 2022. And it's only been around since 2021. Year to date, it is down 27.68%. Over the last 6 months, down 41%. Over the last month, 13%. Over the last 5 days, 17%. And then just 5.65% over the last day. But even though that the stock did drop, I do think on Friday it dropped mostly due to the announcement by Chairman Powell, because as you can see, for the week previous, it had been up near 50 in the high 40s, and then after Powell spoke, it just dropped like a rock. So we'll have to see, but it still has pretty good dividends, which I'm going to be going over in a minute, as well as good options. ZIM Integrated Shipping Services Limited, together with its subsidiaries, provides container shipping and related services in Israel and internationally. It provides door-to-door and port-to-port transportation services for various types of customers, including end users, consolidators, and freight forwarders. The company also offers ZIMonitor, a premium reefer cargo tracking service. As of December 31st, 2021, it operated a fleet of 118 vessels, which included 110 container vessels and 8 vehicle transport vessels, of which 4 vessels were owned by it and 114 vessels are chartered in, a network of 70 weekly lines. The company was incorporated in 1945 and it is headquartered in Haifa, Israel. It has 4,427 employees, and its website, if you want to check it out for yourself, is www.zimary.com. As you can see on the dividend information page, the forward dividend yield is going to be around 46.29%. And like I said, this company is saying that they want to do between 30 and 50% of their profit sharing with their shareholders. The annual payout isn't accurate either. That's the trailing 12 months. But with the current dividend yield, what is going to be at $4.75 per share, that is actually going to come out to $19 per share per year. As you can see, they do have that around the 52.5% payout ratio. They haven't had a 5-year time frame of being on the US stock market, so they don't have anything listed there. They haven't had enough time to grow their dividends either, as I'm pretty sure it has gone down a little bit with the shipping costs going down. They just had an ex-dividend date on August 26th of 2022. Their next one is going to be in another 3 months. So that's going to be right around November, late November. And they do pay out quarterly. So I'm at TradingView right now and just looking at their chart. Like I said, the company joined the US stock market exchange in February 2021. So they have had a whole lot of time on our markets. But these are the most recent earnings. As you can see, for quarter 3 2021, they had an estimate of 8.99 with an actual of 12.16. So that was a surprise of 35% increase. Then in quarter 4 of 2021, they had an estimate of 13.19 and an actual of 14.17. So another surprise of almost 7.5%. Quarter 1 of this year, they had an estimate of 12.57 with an actual of 14.19 and a surprise of 1.62 or 12, almost 13%. And this is in billions, by the way. Now, for quarter 2, they did miss their earnings. They had an estimate of 12.81 and an actual of 11.07. That came out on August 17th during their earnings call. So they had a surprise loss of 1.74 or a 13.59% decrease. So they do have some better news as far as their income statements come. Like I said, they may have just joined the US stock market in 2021, but they've been around since 1945. So as you can see, in 2017, they had a revenue of 2.98 billion with a net income of 6.24 million with a profit margin of just 0.21%. That did drop in 2018 to revenue of 3.25 billion and a net income of actually a negative 125.65 million for a loss and a profit margin and a loss of negative 3.87%. It did improve just a little bit in 2019 to a revenue of 3.3 billion, net income of negative 18.15 million, and a profit margin of a 0.55% loss. Now in 2020, it did improve with, surprisingly, the pandemic. Their revenue went up to 3.99 billion. Their net income rose up to 517.96 million and had a 12, almost 13% profit margin. And then in 2021, it did a lot better. It went up to a revenue of 10.73 billion, a net income of 4.64 billion, and a profit margin of 42.25%. And that's the annual reports. For the quarterly reports, in quarter 2 2021, they had a revenue of 2.36 billion or 2.38 billion, sorry, with a net income of 886.46 million and a profit margin of 37.21%. Quarter 3 saw their revenue rise to 3.14 billion and their net income go up to 1.46 billion with a profit margin of 46.59%. And then in quarter 4, they had a revenue of 3.47 billion, a net income of 1.7 billion, and a profit margin of almost 50%. And it did drop a little bit in quarter 1 2022 when the shipping costs started going down. So they had a revenue of 3.72 billion with a net income of 1.71 billion and a profit margin of 45.96%, which is still really good. And then in quarter 2, as I told you from the earnings just a moment ago, that did go down. They had a revenue of 3.43 billion and a net income of 1.33 billion with a profit margin of 38.88%, which is still really impressive. So this company does have some really good options. I do realize right now the premium has gone down a little bit with the volatility ever since Powell's announcement on Friday, but I do expect it will go up again at some point. And so I myself had sold a $45 put for $120 last week. I did get assigned, but I also am willing to wait a little bit until it goes back up, which I believe it will, until I can sell calls at the $45 to $46 range. In the meantime, if I have to wait a little bit, I can still collect that nice dividends that they're paying. And I like personally doing options weekly, and I also like trying to give myself about an 80% chance of it staying out of the money. So for this company, for instance, what I would do is I would only put right now, if I were doing it again, at the $38 to $38.50 range. I know it's only $20 and $30 because this is 20 and 30 cents per share and it's 100 shares. So it's actually $20 and $30. And you would be able to keep that premium and you would get it immediately and only really get assigned shares if the stock price were to drop below that by the time that it expires on September 2nd of 2022. And if you do get assigned, then you can sell calls, which I'll be going over in a minute. And I know the $20 and $30 doesn't seem like a lot, but comparatively, if you keep selling puts and calls, and if you try to keep over a 30% annualized, that is really nice and helps you grow your account quickly. So here is the calls section. So as you can see, there's some pretty good premium all the way up to about the $44 strike price range, which is still below my $45 strike price that I sold a put for and got assigned. So, which is why I'm going to wait because I will not sell a call unless the premium is going to give me at least 30% return on investment annualized. And right now, at least before the market opens tomorrow on Monday, August 29th, that isn't the case. We'll have to see how the market reacts to everything, but I'm more than willing to wait and collect dividends if I have to for a little bit. And I also have enough cash in my account to sell another put, collect more premium, and if necessary, get assigned more shares to lower my cost basis also. So that's also something I may do in the future if I have to. So this is an options calculator I like to use in order to determine what type of annualized income I'll be able to make. So for instance, if I were to sell another put right now, as it is at 41.05 stock price for expiring September 2nd, 2022 on this stock, like I said, I would go with the 38 to 38.50 strike price. If I went the 38, I would collect 20 cents per share in premium, which is $20. And with my portfolio, I would be able to sell one additional put option with this. So that would give me 32% annualized or $3 per day. And that's over my 30% minimum. So if I were to do this today, this is the one I would probably choose because then it would be a 7% drop and I would still only need $3,800 in collateral in order to sell a cash secured put. Now, as for selling calls, I sold two puts on last week, and that was for Coles at the $31 in strike price, and so I got assigned on Friday, and one for ZIM at the $45 strike price, and I got assigned again on Friday. So if I wanted to, on Monday, I'm going to look and see what the premiums are. As you can see for Coles, from when I looked at last, I could be able to get $38 for a contract at the $31.50 strike price, which would give me a possible total gain of $88. And that would have to just go up 2%. And for them, I would need at least 30 cents per share or $30 in order to get 40%. If I were to try to do one of the others, like for instance, the 20 cents per share, it only gives me a 27% annualized and it is below my minimum. So the next strike price that offer premium to be 30, which would give me the 40%, and I can try 25 if necessary as a minimum to get to 33% annualized. That would be $4 a day with a total gain if it gets assigned out at $75. Thank you for watching. I hope you enjoyed the video and found it helpful. Again, this is not financial advice. This is just my own personal opinion, and hopefully you can get some more information to do research on your own to see if this is a company you would like to invest in. Again, if you like the video, don't forget to hit the like and subscribe button down below. It does greatly help out my channel and will help make me and Harmony both very happy. Thank you and have a great day, and good luck in the markets.